Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, we are celebrating today. It's Taco Tuesday, if you're listening to us live. Oh, no, that's not what we're celebrating. It's National Tortilla Chips Day. Yeah, I like tortilla chips. Little salsa there. Not the real spicy stuff. I'm a wimp. I don't like the real spicy. I like spices, not spicy. Can we put the National Tortilla Chip Day together with National Guacamole Day? I would think that would go well. Yeah, if you like guacamole, and I do. Now, I'm also looking National Trading Card Day. Now, this is not one that I would normally pay any attention to, except for the fact that when my kids, Josh, do the kids even pay attention to Pokemon now, or is that old? Okay, the kids are still into Pokemon. Okay. I'm old, so I don't know this stuff, but when my boys were younger, yeah, it was all about the Pokemon stuff. And I was watching recently, and a Pikachu Illustrator card sold for $16,492,000 earlier this month. Tripled the $5.275 million price that Logan Paul paid for that card in 2021. Not a bad return on investment for just a relatively short period of time. AJ Scaramucci is the one that bought the card. Now, does that name sound familiar to you? There's some people that are, into politics like me. Scaramucci. Where do we get Scaramucci? Well, he probably served one of the shortest terms in history in the President Trump's administration, but it was in the 45 administration. So he served, I think if I remember correctly, and I'm sure we'll get some fact checking, but I think that he was there for about 10 days in the communications department. Didn't make it a whole long time. He's a hedge fund guy, I believe, and his son is a venture capital founder. Not bad for making a little bit of dough there. That's the National Trading Card Day. So Pokemon, I guess there's a lot of money in Pokemon. I know there was. Wasn't that the one, Josh, that they went hunting and they had all these Pokemon cards that were around the orange circle at one time? Yeah, that's what I thought it was. They were scavenger hunts, Pokemon scavenger hunts. Okay, let's move along and see what's going on in the world beyond Pokemon. Well, let's take the Dow Jones Industrial Average is up 381 points. The NASDAQ is up 229 points. The S&P 500 is up 49 points. Oil is up or down now, 39 cents a barrel. Gold is moving back up again, although it's down 76 today. It's all back up over $5,100 an ounce. And I will share that, we just saw, according to Mortgage News Daily, and I will see in the Mortgage Minute when Josh shows us that slide. But Mortgage News Daily shows the 30-year fixed rate loan at 5.99%, 5.99. So we're starting to go the right direction on mortgages and mortgage rates. Are you taking advantage of it? Just a simple question for you. I know there's a lot of people that are thinking about it. I know that the conforming loan yesterday locked a little bit lower than that. So are you taking advantage of it? Are you looking? Are you saving money? Are you planning to save money? Now, we look at oil prices. That always translates, as always, into gasoline prices. And I'm watching that one as well. So the national average gallon of gasoline, $2.95 a gallon. 1 year ago, $3.14 was the national average. And California, though, we go up. We're up a little bit from yesterday, $4.63 for a gallon of gasoline. Watching all of those numbers for you. I got a lot of some bad news. I don't know if it's how many people are going to be affected, but are you watching what's going on in Mexico? And at this time of year, seeing this in Mexico is a bit of a challenge. So the Mexican government took out one of the big time cartel bosses, and his group didn't like it too much. So they started setting a lot of things on fire. Yeah, they killed some of the National Guard men in Mexico. But here's why I bring this up. Now, I'm not a fan of going to Mexico. I don't, there's nothing I can do in Mexico that I can't do in the United States. And hopefully we don't get nearly as many people that are trying to send drugs and things that kill our kids to the U.S. But Mexico, that's how they make a lot of their money. That's who runs the country. So why would I want to go there and support them? Well, we are, as we broadcast right now, this is the end of February. What comes after the end of February? Don't tell me March. Spring break. Where do a lot of the young people like to go for spring break? Mexico. Now, Puerto Vallarta is on lockdown right now. I've got a friend that's been there, and he hasn't been able to get out, trying to go meet his family in Florida. And last I heard, he's not going to be able to get out of there till Thursday. Now, as a parent, I would not be too excited knowing that my kids were going to go to Mexico when they've got this much unrest. Now, I hear that the cartels don't want to mess with the American tourists because it brings money into the country. And who are the consumers of the drugs that the cartels are selling? Unfortunately, yes, it's Americans that are their consumers. So do they want to cause problems with them? I don't think so, but do I want my kids going there? I don't even want them going there when it's not spring break time. But, you know, I'm not that old. I remember spring break. We had a good time at spring break. And, you know, it used to be that for us on the West Coast, Palm Springs, right? That was the place. Now, Josh being out there from at school in Florida, you guys probably just had a short hop to get to spring break parties, didn't you? Did you even have to drive, or was it just were you that close? How close were you? Close? Dayton. Okay. You were in Dayton, or that's where the parties are? Oh, it's okay. 2 hours. Okay. So not a long way. I would assume now, knowing the way it is in Florida and knowing the way I was just at Chapman, 2 hours is a long drive after you've been partying all day. I know that from we were at Chapman, we wouldn't have made a 2 hour drive. So you got to stay there and have a good time. But I digress. We're talking about home and finance, and you are listening to Ron Siegel Radio Discuss. Hey, before I go, put in the comments if you celebrated or where you might have celebrated spring break. And I know some of us are old, but where was your spring break adventures? If you're listening to us on IBC News and Talk, you can just yell at the radio. We will hear you. Just remember, most of the cars nowadays have digital radios. What does that mean? Well, the digital radio, when you put on your car what you're listening to, and it doesn't matter whether it's satellite radio, FM radio. We prefer AM radio because that's where ABC News and Talk is, although it's on both levels. Guess what? We can hear you. So yell at the radio. We'll hear what you're talking about. And you know that our phones are always listening. But you are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, home affordability reaches a 4-year high. Title protection programs, are they really worth it? Managing the risk of outliving your money and what your attorney never told you about life insurance and estate taxes. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you put in your mortgage calculator to determine your principal and interest payment. If you don't have a mortgage calculator, well, don't worry about it. No stress here. rsrlinks.com/calculators. rsrlinks.com/calculators. We got a whole suite of them for you for free. So what did rates do yesterday? Mixed bag, conventional, 30-year fixed, 5.945. Wow. Jumbo 30-year fix, 6.263. That was up. FHA 30-year fix, 5.859. That was down. VA 30-year fix, 5.608. That was down. And USDA 30-year fixed, 5.899. That one was up. If you want our thoughts about the market each and every business day morning, as early as the data allows, simply go to rsrlinks.com/HBOD. That's the Ron Siegel Radio community. rsrlinks.com/HBOD. Again, the Ron Siegel Radio community. And we will discuss with you there our thoughts about the market and lots of other stuff. What are the markets doing right now? The S&P 500 is now up 55 points. We're looking at the 10-year Treasury is pretty flat, 4.033. And the mortgage bond, that one's down 1 basis point. Par 40 is where we're sitting at right now, right on a level of resistance. So we've been kind of fighting with that one. You know, if it goes down, we've got room to run downward, and we hope that we will see it go down. But all that stuff, not the analysis, but all the rest of it, is available on the super secret website, google.com. So what are we watching now for you? What's driving this? So as I mentioned, stocks are higher after a tough day yesterday. Mortgage bonds are flat, testing the critical par 38 level. Once again, as I mentioned, we're at par 40 right now. Later tonight, we've got President Trump will deliver his State of the Union. We will listen for any announcements regarding housing and anything else that we think makes sense for you. The Case-Shiller Home Price Index, which is the gold standard for appreciation, showed that home prices rose a seasonally adjusted 0.4% in December after rising a like amount in both October and November, which was stronger than estimates. Clearly, the drop in rates towards the end of last year caused an increase in demand and supported home price appreciation. The raw figures showed that home prices fell 0.3%, which is expected during that time of year. Year over year, home prices rose 1.3%, which was down slightly from 1.4% in November. The FHFA, Federal Housing Finance Agency, released their house price index, which measures home price appreciation on single-family homes with conforming loan limits. Different than Case-Shiller, it does not include jumbo loans or cash buyers because you can often garner a cheaper price with cash. FHFA tends to be a bit stronger. The FHFA reported that home prices rose 0.1% in December after seasonal adjustments. Year over year, FHFA is showing that home prices are up 1.8% year over year, down slightly from 1.9% in the previous report. A big driver of demand and appreciation will be rates. Just yesterday, rates fell beneath that 6% level, as I mentioned a little bit ago. Lower rates will mean more activity, which will bid prices higher. The forecasts out there average out to 6.818% on the low end. And we think it's going to be somewhere around 5.5 to 5 7/8. Something else that will determine appreciation in your area is supply. So we got to watch supply all the time. If you want to know the supply in your area, rsrlinks.com/market report, rsrlinks.com/market report. Also, looking forward, Fannie Mae and Pulsenomics released their home price expectation survey, which asks the top 150 economists in the U.S. what their thoughts on home price appreciation. The median forecast for 2026, 2.15%. We think it's going to probably be around 3.5%. But remember, here in Southern California, we're generally double what the median is around the country. Over the next 5 years, the median is 15%. Still meaningful. That's a cumulative number, 15%. Still meaningful for wealth creation. If someone bought a $500,000 home, they would gain $75,000 over the next 5 years in appreciation alone. So think if they put down 10%, $50,000, and over the next 5 years, that has an additional $75,000. So now your $50,000 is $125,000. ADP released their weekly employment report showing that private employers added an average of 12,750 jobs per week in the 4 weeks ending February 7th. That pace is for around 51,000 jobs, and although this figure has been declining, it is still soft. That is the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. Borrow Smart segment brought to you by gethomeselect.com, gethomeselect.com. What if your biggest retirement risk isn't the stock market, inflation, or even Social Security, but simply living too long? I think we want to live long, don't we? I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. And today we need to talk about something most financial advisors skip right over. It's called longevity risk. And it could be the single biggest threat to your retirement. Longevity risk. Here's a number that stopped me cold. 45% of workers say their greatest retirement fear is outliving their money. Not a market crash, not losing their job, outliving their money. And honestly, that fear is well-founded. The Census Bureau tells us that women typically retire around 62, men around 65. Social Security projects that today's 63-year-olds will live on average into their mid-80s, and that's the average. That's the average. Plenty of people are living well into their 90s, some past 100. So ask yourself this. If your retirement lasts 30 or even 40 years, how well do you think your savings will hold up? Now, here's where it gets interesting. Most people plan for retirement by looking at one side of the equation, their assets, their 401k, their investment accounts. What's in the pile? But nobody talks about the liability side, the debt they're carrying into retirement, the mortgage payment, credit cards, car loans. Because here's the truth. It doesn't matter how much money you have saved if your monthly obligations are eating it up faster than you planned. I had a client, good people, retired at 65 with what they thought was plenty saved, but they still had 12 years left on their mortgage, 2 car payments, and credit card balances they'd been carrying for years. Their monthly obligations were over $4,000 before they bought a single bag of groceries. Within 5 years, they were in real trouble. Strategy beats rate always, and the strategy here starts before you retire, not after. Let's talk about a few realities every pre-retiree needs to understand. Social Security isn't a guarantee. The Social Security Trust Fund could face funding challenges as early as 2034. Now, Congress may step in before that happens. They will. But the point is, hoping Social Security covers your needs isn't a plan. Healthcare is another one people underestimate. A healthy couple retiring at 65 can expect to pay close to $315,000 out of pocket for healthcare expenses over their lifetime in retirement. That number tends to shock people. It shouldn't, but it does. And Medicare doesn't kick in until 65. So if you retire at 62 or 63, you're paying for private health insurance out of pocket for a few years, and that adds up fast. So what does this mean for you? It means retirement planning has to include your liabilities, what you owe, what you're paying each month, and what the strategy is to reduce those obligations before you stop working. That is strategic debt management, and it's exactly what we help families think through. Now, I want to share something that very few people know exists, and when I explain it, most people say the same thing. Why hasn't anyone told me about this before? It's called the Wealth Builder Loan, and you can learn more about it at gethomeselect.com, gethomeselect.com. Here's the concept. Most people think of their mortgage and their savings as two completely separate things. You make your mortgage payment every month. Your balance slowly goes down and your savings sit somewhere else doing their own thing. The Wealth Builder Loan changes that relationship entirely. Think of it like a checking account that's also your mortgage. Your income goes in, your bills go out. And every dollar sitting in that account is actively working to reduce your principal balance every single day. So what does that mean in practical terms? It means if you have $5,000 sitting in your account before your bills go out, that $5,000 is reducing the balance your interest is calculated on. Every day those dollars are in there, they're working against your mortgage balance instead of just sitting idle. And here's the part people really like. You still have full access to that money. It's not locked up. It's not tied up in equity you cannot touch. If you need it, it's there. That's the liquidity piece. Safety, liquidity, and return. This product checks all three. The result? Most families using this strategy pay off their home years earlier than they would with a traditional mortgage without making extra payments, without changing their lifestyle, just by letting their existing cash flow work smarter. Now think about what that means for retirement. Imagine walking into retirement with your home paid off, no mortgage payment, eating into your fixed income, and the equity in your home still accessible if you need it. That's not just a financial win. That changes everything about how long your money lasts. I had another client, a client in the early 50s who thought they'd be carrying their mortgage well into retirement. After we looked at the Wealth Builder Loan and ran the numbers on their cash flow, they were on track to pay off their home nearly 8 years earlier. 8 years of mortgage payments they won't have to make in retirement. That's real money. That's real breathing room. Let's bring it all together. You evaluate every financial decision through three filters: safety, liquidity, and return. Most people only think about return, but safety and liquidity matter just as much, especially when you're living on a fixed income for 30 years. The goal isn't just to save more. The goal is to structure your financial house so that your money lasts as long as you do. And part of that structure is making sure your biggest monthly obligation, your mortgage, is working as hard as you are. Bottom line, if you want to learn more about the Wealth Builder Loan and whether it makes sense for your situation, visit gethomeselect.com. That's gethomeselect.com. And if you want to start getting your if you want to start getting your overall financial house in order, visit rsrlinks.com/keysteps. That's rsrlinks.com/keysteps, because luck is not a plan and hope is not a strategy. I am Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment, brought to you by gethomeselect.com, gethomeselect.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, home affordability reaches a 4-year high. What your attorney never told you about life insurance and estate taxes and title protection programs. Are they really worth it? All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube, Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Here's something worth paying attention to. Home affordability is the best it's been in 4 years. 4 years. So if you've been sitting on the sidelines thinking you missed your window, you may want to rethink again. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Now, when people hear affordability is better, they usually assume that means rates dropped dramatically. And yes, rates have come down some, but that's not the whole story. What's really driving this shift is a combination of 3 things working together at the same time. Rates are lower, home price growth has slowed down, and wages have gone up. When those 3 things line up, the math changes, and right now, the math is changing in your favor. Let me put that in plain terms. A year ago, a family earning a good income might have looked at a monthly payment and said, we just can't make that work. Today, that same family runs the numbers, and the conversation is different. Not because they got a raise overnight, not because homes suddenly got cheap, because all 3 of those factors move in the right direction at the same time. That doesn't happen often. Now, I want to be straight with you. The affordability problem isn't solved. Nobody is saying homes are cheap. What I'm saying is that a lot of families, the numbers work better today than they did 12 months ago. And if you ran those numbers before and walked away, worth taking another look. Here's what I see in my practice. People come to me after they've already decided they can't buy. They made that decision based on numbers from 6 months ago, a year ago, and sometimes longer. They stopped looking, they stopped asking. And in the meantime, the market shifted and they didn't know it. That's a real cost, not just financially, but in terms of the wealth building opportunity that comes with home ownership. Because here's the thing people forget. The conversation about buying a home isn't just about the monthly payment. It's about what happens to your household finances over time. When you're renting, your landlord is building wealth. When you own, you are. The payment may feel similar, but the outcome is completely different. And that's where strategy comes in. Strategy beats rate always. I've been saying that since 1983. What I mean is this: 2 families can have the exact same mortgage rate and end up in completely different financial positions 5 years from now. One had a plan, one didn't. The plan is what matters. So what does the plan look like? It starts with knowing where you stand. What does your budget actually look like? What's your household blended interest rate right now? Meaning, what are you paying across all your debt, your car, your credit cards, your student loans, all of it? Because sometimes the mortgage payment isn't the problem. The problem is everything else. And a strategic home purchase can actually help fix that picture, not make it worse. If you've been thinking about buying, but you're not sure if the timing is right for you specifically, let's start with the basics. Go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. It's a simple tool to help you get your financial house in order before you start the process. No pressure, no commitment, just a smart first step. And if you're ready to take that next step and want to go into the home buying process with a real advantage, check out rsrlinks.com/certified buyer. That's rsrlinks.com/certified buyer. The certified buyer program puts you in a stronger position before you ever make an offer. Sellers notice, realtors notice, and it can make the difference between getting the home you want and watching someone else get it. Affordability at a 4-year high, lower rates, slower price growth, rising wages, all three moving in your direction at the same time. This is the window a lot of people have been waiting for. The question is whether you'll recognize it when it opens. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. Let's see, Borrow Smart segment brought to you by gethomeselect.com, gethomeselect.com. What if I told you that one of the most powerful estate planning tools available has nothing to do with your mortgage rate, and that most families never hear about it until it's too late? I'm Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. And today we're talking about something that sits squarely at the intersection of protection, strategy, and leaving something meaningful behind for the people you love. We're talking about an irrevocable life insurance trust. You may have heard it called an ILIT. And no, I didn't make the acronym up. I wish I had. So what exactly is an ILIT, and why should you care? Here's a simple version. An ILIT is a trust that owns a life insurance policy on your life. You create it, you fund it, and when you pass away, the trust receives the insurance proceeds and distributes them to your beneficiaries, typically your family. Sounds straightforward, right? But here's where it gets interesting. Because the trust owns the policy, not you. Those proceeds generally don't get counted as part of your taxable estate. That's a big deal. Depending on the size of your estate, that could mean the difference between your family keeping what you built and the government taking a significant bite out of it. Think about that for a moment. You've spent decades building equity in your home, growing your retirement accounts, building your business. The last thing you want is for a portion of that to evaporate at exactly the wrong time. Now, I want to be clear. I am not an estate planning attorney. I work with trusted professionals who handle the legal side of this. What I am is someone who's been in the financial world since 1983, and I've seen too many families blindsided by things they could have planned for. That's why I talk about this, because awareness is step one. So let's walk through what an ILIT can actually do for your family. First, it addresses liquidity. When someone passes away, there are real immediate costs: funeral expenses, final medical bills, probate costs, taxes. If most of your wealth is tied up in real estate or a business, your family may not have easy access to cash when they need it most. An ILIT can be designed to provide exactly that kind of liquidity without forcing the sale of assets at the worst possible time. Second, it manages estate taxes. Life insurance proceeds paid directly to your beneficiaries are generally income tax-free, but they still could be counted in your taxable estate if you own the policy. By transferring ownership to an ILIT, those proceeds may stay outside your estate entirely. Third, it creates an inheritance. After liquidity needs are met, the remaining proceeds go to your beneficiaries, and because those assets belong to the trust, creditors generally cannot come after them. That's a layer of protection most people never think about. I had a conversation with a family not long ago. They've done a great job accumulating assets over the years, home paid off, solid retirement savings, a small business with real value. But when we sat down and looked at the big picture through the lens of safety, liquidity, and return, it became clear that if something happened, the surviving spouse would have been in a tough spot. Assets, yes. Cash to navigate the immediate aftermath, not so much. And ILIT was one piece of the conversation that helped change that picture. Now, I want to say something important. Setting up an ILIT is not a do-it-yourself project. This needs to be done with a qualified estate planning attorney. The rules around it are specific. The tax implications are real. Done correctly, an ILIT can be a cornerstone of your family's financial plan. Done incorrectly, you could lose the very benefits you were trying to create. That's why I work with a trusted network of estate planning professionals I can refer you to. My job is to make sure the mortgage and debt side of your financial picture is working in your favor. Their job is to make sure the estate side is buttoned up correctly. Together, we can look at your complete financial picture. Here's what I want you to take away from today. Estate planning is not just for the wealthy. If you own a home, you have an estate. If you have life insurance, how it's structured matters. And if you've never had a real conversation about how your assets will transfer when you're gone, that conversation is overdue. Strategy beats rate always. And an estate planning strategy can mean the difference between leaving a legacy and leaving a mess. If you're ready to take a serious look at your financial picture, start at rsrlinks.com/keysteps. It's a tool that helps you get your financial house in order so you know exactly where you stand and what to do next. That's rsrlinks.com/keysteps. And if you want to connect with a trusted estate planning professional, go to rsrlinks.com/estate. rsrlinks.com/estate. We've done the legwork of finding qualified people who can help you put the right structure in place. That is rsrlinks.com/estate. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment brought to you by GetHomeselect.com. GetHomeselect.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, title protection programs, are they really worth it? We'll chat about that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. At 800-306-1990, 800-306-1990. Your Credit Matters segment today being brought to you by rsrlinks.com/debt-free. rsrlinks.com/debt-free. You've seen the ads. Maybe you've even clicked on one. A company promises to protect your home, your identity, your equity. For just a few dollars a month, sounds like a no-brainer, right? But here's the question nobody's asking. Are these title protection programs actually protecting you, or are they just protecting their own bottom line? I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. And today we're going to talk about something that's landing in a lot of inboxes and airwaves right now. The title protection and identity theft programs, because your home is likely your single largest asset, and you deserve straight answers about how to protect it. Let's start with the most heavily advertised product in this space, LifeLock. They charge $12.49 a month to promise up to $1.05 million in reimbursement if something goes wrong. That sounds impressive. But here's what the fine print does not tell you. In my career, and we're talking since 1983, I've never seen a single client tell me that LifeLock or a program like it saved them from a major loss. Not one. If you have a story like that, I want to hear it. And there's something else worth knowing. This is a company that has settled the Federal Trade Commission twice for deceptive advertising. Once for $12 million and again for $100 million. No, I'm not saying they don't provide any value. But before you spend money on any product, you deserve to know its history. So what problem are these programs actually trying to solve? Identity theft is the #1 crime in America, and real estate fraud is growing faster than almost any other category. The California Department of Real Estate recently issued a consumer alert primarily aimed at seniors, but honestly worth reading by anyone who owns property or works in real estate. There are 3 areas where fraud is hitting hardest right now. First, foreclosure assistance scams. When a homeowner is under financial pressure, they become a target. Bad actors promise to help and deliver harm. If you find yourself in a difficult spot, please work with people you know and trust, because this space is tricky even for experienced professionals. Second, fake rental listings. Criminals pose as property owners, collect deposits, and disappear. A simple way to protect yourself: verify the actual owner through public records before you hand over a dime. Third, and this one made local news, fake liens. One individual placed fraudulent mechanics liens on Beverly Hills properties totaling $568 million. Ow! Law enforcement caught up with her, but clearing those liens is going to cost each affected homeowner real time and real money. Here's the good news. There are free and low-cost solutions that work better than many paid programs. Broward County in Florida created an owner alert notification service, completely free. That sends homeowners a notice anytime a document is recorded against their property. Simple, effective, and it costs nothing. I believe that Orange County, California has the same thing, and I'd love to see every county in California offer the same thing. If homeowners are paying property taxes, the least their county can do is send a text, an email, or a letter when someone tries to steal their most valuable asset. So what's the takeaway? Before you pay monthly fees for a protection program, check what your county already offers for free. Verify ownership records regularly. Work with professionals you trust, and understand that a monthly subscription is not a substitute for staying informed. Let's take a quick look at where the real estate market stands right now, because there's some genuinely good news here. Mortgage rates, well, I think I told you that yesterday, 5.94% according to OBMMI. Same as last week, or a little bit below last week, and still the lowest we've seen in years. And what's happening as a result? Mortgage applications for home purchases are at a 3-year high. Now, they're still well below pre-COVID letters, but the direction is right. Nationally, inventory came in at 1.223 million homes in January, near historic lows outside of COVID period. What does that mean for prices? As long as supply stays tight, home values are not going to drop significantly on a national level. Here in Southern California, the Los Angeles market sits at a market action index of 36, which means we're still in slight seller's market territory, but inventory is growing and price per square foot is starting to soften. For buyers who've been waiting on the sidelines, this combination is improving rates and shifting inventory, maybe the best window we've seen in almost a decade. I had a client recently who was paying for 2 different protection services and had no idea where either one actually covered. When we sat down and looked at the total picture, we found free county notification tools, already existing credit monitoring through their bank, and a couple of services that duplicated each other completely. And hey, don't forget about Key Steps. It does a lot of it as well. rsrlinks.com/keysteps. That's money that could have been directed into building equity into their actual household balance sheet. That's the strategic debt management mindset. Every dollar leaving your household should be working for you. If it isn't, we need to take a look at that. So here's my recommendation. Before you sign up for any protection, take a few minutes and understand what you already have. Check your county recorder's website. Talk to your bank and monitoring services. And if you want to take a real strategic look at your household financial picture, where your money is going and where your equity stands, and whether your debt is working for you or against you, go to rsrlinks.com/keysteps, rsrlinks.com/keysteps. It's a simple tool that helps you get your financial house in order, and it's a great first step because protecting your home does not start with a monthly subscription. It starts with a plan. I am Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Your Credit Matters segment, brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. I think we've got some time to give away some stuff today. So, interest rates are down. Have you thought about dancing? No. I don't talk about that kind. In fact, we are getting close to March Madness, aren't we? rsrlinks.com/2step, rsrlinks.com/2step. That is where we help you take a look at where your financial picture is right now. We want you to take a look and see what's your blended household interest rate. If you don't know, we've got a calculator for it, rsrlinks.com/calculators, rsrlinks.com/calculators. You can go in there and grab a calculator, figure out what your blended household interest rate is, or you can call us and we'll help you with it. but you figure out what your blended household interest rate is. Step 1, if you've got equity in your property, and most people do if they've owned for any more than a year or two, let's take a look and see if we can strategically reposition that and get rid of some of those high interest debts. Now, whether you know it or not, that 3% loan could be killing you. So you want to take a look at rsrlinks.com/3pct, rsrlinks.com/3pct. Because what we want to do is know what your blended household interest rate is. When we do that, then what we're going to be doing is we might restructure your current debt and, help on the cash flow side. Now, we apply some of that cash flow to the new loan, so we bring down the principal balance of that new loan faster than anything you've ever seen. Then we wait 6 to 12 months. Why do we wait? Because we want to see those benefits hit your FICO scores. As you pay off those debts, as long as you don't go and rack them up again, your FICO score should increase. How do you know? You go to rsrlinks.com/FICO, rsrlinks.com/FICO, and you can take a look at your real FICO score. You can also take a look and see if there's anything that you don't like on your FICO report that's not accurate. Remember, everything that's on your FICO report must be complete, it must be accurate, and must be verifiable. If it is not complete, accurate, and verifiable, it must be removed. So over that 6 to 12 months that we were just talking about, we're going to see where your FICO score goes. It should improve. Now we're going to look and see if it's time to restructure again. Why would you be able to restructure in 6 to 12 months if you just did it? Well, FICO score increase. Maybe interest rates have come down. We definitely know if you're not doing a second cash out refinance, that's going to save you some money on your refinance. And oh yes, we're going to give you an option to do all of that with no cost. Now, will that make sense to do it for no cost? I don't know. But we're going to give you an option to take a look at it. That's why we do say that strategy beats rate always. Strategy beats rate always. You need to have a strategy. The 2-step is a strategy. It's a comprehensive strategy to deal with the liability side of your balance sheet. And that's why I tell you repeatedly that I am a certified liability advisor helping families build wealth through strategic debt management. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.